Hey Juan, I'm thinking we should start doing a little podcast stretching to limber up for our audience, get a little bit loose. What do you think?
I think that works.
A little joke at the beginning of each episode. Just remember, a quick reminder, guys. Make sure you smash that like button every time you like these videos. It improves the production quality around here. We only got 5 likes on the last video, so that's why my mic sounds better than Juan's. So I'm gonna need you guys to smash this button, leave some thoughts and prayers in the comment for our production quality, and can we get some likes for Juan's mic, please? Thanks.
This guy, my mic is improving slowly.
Beats by Dallas, make it hurt.
What's up, Relentless Traders? It's your host, Surreal.
And Huangar 97. Welcome to episode 2, everybody. We made it.
We made it.
Um, we've definitely been trying to, up some production, quality. So everybody's gonna notice a couple differences in the podcast this week, and probably every week for a couple of weeks, right?
Yeah, we're gonna try and improve it. Sound quality, obviously, production quality is going up, and then we can just focus on the content moving forward and providing you guys more info on our journey, and as we learn and improve along the way, you guys can enjoy that in a good quality production.
100%. This week and every week, we're gonna try and do a little bit of a weekly overview for each of us. Every week, we're gonna see something different in the market. As individuals, we're gonna try new things possibly. Without further ado, Surreal, why don't you talk to me about your week and some of the trades you took and just what you saw in the general market?
Yeah, I think doing these end of the week reviews is going to be great, and we can kind of structure the podcast and kind of stay relevant in the beginning of the podcast, and then I think we're going to pick a topic at the end and talk about that. So going right into the end of the week review, first week of the year, market conditions. Juan, how are we feeling?
I definitely think we're seeing a lot more, background capitulation as we've seen in the
Mm-hmm.
past month and a half. I don't think we're quite at the, I don't think we're quite at that oh my God moment. But I
Mm-hmm.
definitely think people are starting to worry because a lot of stocks are getting kind of wrecked in the background, even as the indexes are even towards their highs still.
Yeah. Yeah, I think we saw that narrow range back in November, like we talked about in episode one, where we had some of the leaders like AMD and Nvidia. The semis were looking really strong, but a lot of growth stocks that didn't have the fundamentals in the background or strong fundamentals were starting to just get hammered. And me and Juan, we don't really pay attention too much to macro, but we do pay attention to sentiment and underlying market conditions, such as market breadth, right? And looking at whether that's the advanced decline line, which I don't rely on too much, but I use another underlying fundamental for market conditions, and that's just very simple: stocks that are up 4% and stocks compared to stocks that are down 4%, and seeing what that number looks like day to day to day. So you can quickly tell, if you're having some, multiple days in a row, and that number is fully inverted, where we may only have 100 stocks in the market that are up 4%, and then you have 900 stocks that are down on the day 4% or more, and you see these big selling days multiple days in a row. It becomes very clear too, if you run through multiple charts of different sectors and of the stronger stocks and you're seeing them get beat down. It becomes very clear that the indexes are telling you one story, but the rest of the market is going in a totally different direction. And I think we saw that through late November, December 1. The indexes were chopping around near their highs, but every stock was getting sold off.
Yeah, 100%. And I definitely think we're transitioning into a type of market where it's going to be more of a stock pickers market. You're not going to be just be able to pick a maybe like a full group and wait for a base out and a go.
Mhm.
We saw, we for a little bit there, I thought we were seeing strength in EVs. It turns out everything else was getting crushed, and then Ford stood out obviously this week. Um,
Yeah.
for a while, semis were doing well, and then you saw AMD and Nvidia getting crushed in the background, and then MU was holding up really well. So
Yeah, that whole sector.
yeah, that whole sector was strong. There was a couple laggards there. I know we saw, I think it was last week we saw TSM really pick up the pace after they got that price upgrade. So I definitely think we're transitioning more into a stock pickers market and really focusing on those individually strong stocks. It's what's really going to make a difference in the accounts at the end of the year. Um,
Yeah.
I think it's very important to just to focus and to like really know where the rotations are happening.
Yeah, for sure. And especially if we enter a capitulation phase, we had some rough selling days this past week. So, I don't think there's any guess, that we are in bear market territory right now. Even though again the indexes are telling a different story, and we've had some bad selling days. A lot of stocks have just been beaten down so bad. So, you know, it's if your time frame's a little bit longer. For me, I'm a swing trader. Juan's more of a scalper. So for us, keeping overall awareness of the market conditions helps because, we can take that information and then implement it within our strategies. If I'm a swing trader looking for breakouts, or if Juan's scalping looking to go long, he may not want to try and be as aggressive on a big selling day, a big down day. Or he may want to wait for a counter trend rally, where the selling pressure lets up and he can get some nice bounces on stocks to scalp. And same for me. If I'm trying to take bounces, I may not want to get aggressive or be looking to take breakouts in these types of conditions, even though there were some good ones. And I guess I can get into that now. One.
Yeah,
Uh,
definitely. I definitely think it's important for us to discuss, just kind of the typical trades that we took. This is also a form of journaling for ourselves.
yeah.
So I think it's important for us to be very, very clear, even with the audience about like what type of trades we took, what we saw in them, and just kind of go a little bit into that. So if you want to take us into like what you saw in a couple of the trades you took and why you took them, go right ahead.
Yeah. So we can get right into it. I just have two trades that I kind of want to review. So Ford was standing out, like we discussed shortly ago. It was standing out when the market was kind of having some struggles in December. It was actually ranging out. It made a big move off its lows over the past couple months, and then it began ranging out. It began going sideways, volatility, and the price ranges began contracting, which is, as you guys know from the introduction, is one of my setups, the RBO, the range breakout. And essentially, you think of bear flag, or sorry, not bear flags, bull flags, bull pennants, anywhere, or Mark Minervini VCP type patterns, anywhere where volatility and price is contracting and getting tighter. I'm looking for those tight areas on the charts where I can find an area where I can easily manage risk, keep my stops very tight, and then look for those explosive moves, trying to jump on that rocket in the safest area right as it's about to take off, essentially. Well, I was stalking forward all through December, pretty much, and I took a couple trades on it in December. It had about two false breakouts, and yeah, so I was stalking it into this past week, the first week of January, and it began to break out of its range again for the third time. I took a very conservative trade due to market conditions again, keeping my situational awareness of the overall conditions within the market, knowing that it's been a tough environment. Breakouts are, you know, they're most likely not going to follow through when the majority of stocks are selling off. But Ford did break out on its third attempt and it pulled back. I got very aggressive with moving my stop to break even, which was a big lesson for me this week on that trade. If I'm trying to take an entry on an explosive move to the upside and I'm focusing on a setup where volatility is contracting, theoretically, I need to allow enough room within my stop to let the price action at least have a natural reaction. And if you go back and look at the forward chart, you'll see that on the third attempt to break out before it made this big move, it had a slight little pullback of about 3 days. And that was enough to come down close enough to my entry and take me out right before it exploded up. So that was a huge lesson for me this week. Not being as aggressive to move to break even, if I get a good entry, right? If I get a bad entry, or if the price action is coming in fast and hard on heavy volume, that's a big red flag for me. But a natural pullback, I should have given the price action a little bit more room and a little bit more time to kind of play out, and I would have had a nice big winner on that one. Unfortunately, it was a break-even trade for me.
Well,
And then,
you
sorry,
know,
go
we
ahead.
we can't it's also, I think that that's also been a big factor when it comes to like market psychology lately,
Mm-hmm.
because we've seen a lot of stuff attempt to break out and same day or next day reverse really hard.
Yeah.
And so I think just going into those type of trades too, your psychology was probably a little bit skewed there for that exact reason. So I definitely think, there's some lessons to be learned there, but I definitely think, you were safeguarding, and I think it's okay as long as we're managing risk. The upside will come for sure.
Yeah, 100%. And that's all it's about, is just managing that risk and then making the incremental improvements. And I fully accept the risk when I take a trade. And that's been a big shift for me more recently. Ever since I started focusing on these setups, it allows me to have the confidence to let that stop work. And I think that was the realization with that trade this week is, hey, you have a a high probability setup. You're accepting the risk. I'm position sizing properly. So when I set that stop, I've already accepted that loss in a sense. So there's no, you know, I think there is discretion in there with moving to break even quicker, but it also, that will get better over time. I won't choke trades off at the entry as much. So that was a big lesson. Let the trades work a little bit, but also, play good defense, I think.
Yeah,
Uh,
100%. I definitely, like we said, at the end of the day, this game's about managing risk more than it is about, hoping or waiting for the upside potential.
yeah.
And I think it's very important for anybody who's new in the market to understand that and to just grasp that concept really quickly, because if you don't, you're gonna blow up accounts, you're gonna get wrecked, and your mental capital is gonna deplete very fast.
Yeah, you're going to get taken out of the game. Uh, Moving into my second trade, DWAC. It had a nice pop out of a range as well, another setup from range breakout. And I have an issue with the PDT rule, and we talked about this too. Another big lesson was, DWAC was a perfect setup. It was a nice tight range on the daily. And Friday, Thursday, sorry. Was it Friday or Thursday? I can't remember.
Yeah, you took it Thursday afternoon, I believe,
Yeah.
into Friday.
Yeah. And so Thursday, just before close, my alert went off. I had an alert set within the range to kind of take a look at it. And it was coming out of its range strong, heavy volume, price was moving quick. The issue was I didn't have any day trades because my account is under 25,000 and under the PDT rule. So I have made a rule in the past that if I don't have day trades available, meaning that I cannot buy and sell the same product, the same stock, in the same day, that I would not take a trade. However, now that I'm focused on these specific setups, this was a perfect setup. And it was acting with all the characteristics of a breakout that you want to see. Heavy volume, price moving quickly and continuing. I hesitated a little because I was aware that I didn't have any day trades, but the setup for me was 5 out of 5. And my execution was actually 5 out of 5 on this. I got a really good entry pretty early, and it moved right into profit, and it ran hard. It ran about $10 from my entry in the last 30 minutes, and it ran in after hours right to a resistance area I had marked where I wanted to scale out and take about half or 80% of the profit off the table. Well, the issue was I didn't have any day trades available. And so that was a dilemma for me because even though I hadn't previously made that rule of not to take an entry if I don't have day trades available, essentially preventing me from managing risk, because had I been wrong, that is, you don't want to do that. You don't want to be able to not sell if it moves against you and limit your loss. So, it may sound obvious. Well, yeah, you broke your rule. But I think for me, the biggest realization was that even if you have a perfect setup, even if your execution is 100% on, I knew exactly where I entered perfectly. I entered with perfect size. I I would have been able to sell at the right place. I had my level set, but because of PDT rule, I couldn't sell or I would have risked locking my account for 3 months. So, it came full circle and it's like, well, even if you have a perfect setup, a perfect execution, it's not even worth the risk taking that trade if you can't manage risk in the first place, or even sell if it's a winner. And so the next day that trade came in on me and I got out with a very small loss. So that was a huge lesson that those trades are not even worth taking if I can't manage risk. And so those were my two biggest lessons from this week.
Yeah, the PDT rule is it's a little bit rough. I think there's a lot of controversy online, especially now with the whole retail trader pop that we got in 2020. About whether that the PDT rule is even there to protect you at the end of the day. That's the argument made by the SEC for sure. About protecting smaller accounts. But if smaller accounts can't manage risk because of certain aspects, I think if you're blowing up because if you're blowing up because of other aspects, then that's totally on you. Because managing risk should just be in your everyday, right?
Foundation.
Yeah, it should be in your foundation for sure. But I think taking a loss because for example, you couldn't manage risk, because you're locked up by PDT. I just think it's a little rough. I don't know on
It's
what specific side I'm on. I think I need to like really really gauge where I'm at. I think a lot of people, I think they're just trying to protect people from margin. But if you're under PDT, maybe you shouldn't have margin. That's there's a lot of if, ands, or buts about PDT for sure.
Yeah. Yeah, and that was the biggest lesson is that as long as my account's under PDT, it's a simple, it came down, it wasn't an issue of my execution, it wasn't an issue of my setup selection. It was it comes back to the process, right? And it's a simple fix. It was a crack in the process. Hey, if there's no day trades, you know, I'm not taking an entry even if it's a setup. And so that makes me really want to be patient for grade A high quality setups and not be wasting and stopping out on marginal setups, especially when the market's in such a difficult spot as it is now.
Yeah, 100%. I'm gonna go talk about my week and my trades really quick. And then we can move on as well.
Yeah.
So as everybody knows, from the last episode, I am a day trader. And I day trade options. That's what I do. I have a very specific setup that's been working for me in the past month. And it's key level break, so it's just basic horizontal resistance levels. I do use the wicks as well for those horizontal resistance levels, and anytime I see a very clean level somewhere, like even that's been wicked to the cent, to the 5 cent range or 10 cent range, I will place a horizontal resistance level and I will take a trade on the break of that level. um, there's certain aspects of my setup that I gauge in real time, typically 5, 10, 15-minute charts. When it comes to volume and price action, where I know that, the way a stock is reacting to that price level, it'll most likely break. So this week we spoke a little bit about what was strong in the market. Chips, specifically, MU this week it really showed off. It had that horizontal all-time high resistance break this week. I was a little bit iffy on this trade, and my execution really showed that. But I was very iffy on this trade because it was an all-time high break. It wasn't just a horizontal resistance level break. And I'm iffy on those all-time high breaks because a lot of times we'll see a lot of late longs get trapped up into those all-time high breaks, chasing
Chasing.
it. Yeah, exactly. Um, so I knew if I was gonna get into this trade, I had to get in a little bit before. I had a demand zone a little bit lower than that all-time high break where price was getting pretty close to opening up there.
Hmm.
And I was hoping that that price would hit it, right immediately after open, and I would get a good reaction out of it.
Yeah.
Turns out that price just opened and started popping right away, and that kind of gave me a little bit of an iffy. I had everything was there. I was comparing volume to previous days. It was excellent. Price action was amazing. The volume was getting thick really quick. Um, so I hesitated a little bit, and I got in long um for a contract at like right before the, I think it was like 20 cents before the all-time high break.
Hmm.
And price flowed. I mean, price flowed very fast. I think it was maybe within 30 seconds. I was a little bit over. I was like 25% up on the
Yeah.
contract. And I'm all about stacking the small winners. I don't care for 100% gainers. I don't care for that. I'm all about managing my risk, stacking the small winners, and moving on.
And
Because
compounding.
yeah, compounding, especially when you're trading options, compounding is so powerful, and I think people really misunderstand the power of that, especially when it comes to something as leverage, a market as leverage as options is. Um, and so I got long at that right below that break. I was instantly in profit. Candle closed it's something I'm working on personally, letting trades um kind of run a little bit more when I'm seeing positive price action.
Yeah.
And that the first candle that I was already in, that first 5 minute candle, it closed towards the top. It closed on high volume, and it closed very green right through my level. It was already, at this point MU was already at all-time highs. Um and I was up. I was up over 20%. I was 25, 30% on the trade. And the next candle opened and came back in really hard. However, it was on lower volume. Typically when I see that, um, I know that price will more than likely get bought up. It's just coming back to retest the level. And when I saw that price come back in on me, it started coming in pretty hard, and I went from a positive 25% position to like a negative 5% position, and I got a little angsty, and I got out of the trade. Um, little did I know that I was getting out of the trade right at the bottom of that red candle, because it got bought up bought up right over the level, and my trade went to like 40, 50% right after that.
Hmm. You
Um,
cut at the bottom of the
I,
pullback.
I cut I cut at the bottom of the pullback. I
Where
want
was
to
your
say
stop?
I want to say I followed my rules, but I think I cut it out a little bit angsty. I
Hmm.
was got a little angsty on the cutout, because I only cut it out. I was like minus 4.5% on a contract that's $200. It's not that much. I put my stops at like 10% on these contracts, 10 to 15% on these contracts, just because that's I can manage for multiples of risk. Um, so I didn't give it enough room to breathe, and I realized that I had cut that contract at the bottom. There was a couple things, psychology in play here. I think this was the first trade of 2022 for me, and so that played a little bit of a role, because I wanted to start off on a good note. I didn't want that to like subconsciously affect my trading going, just to start off the year. And so when it went really thick green, and then it went red, all I could think was like, wow, I just let a green trade go red. And I think
Almost like
that,
a flinch.
yeah,
You
I
flinched.
definitely jumped a little bit. Yeah.
Interesting.
Um, so there's a couple lessons to be learned in this one, just because this gave me enough time to market in um to this contract before this went to all time high. I got very very angsty, very twitchy on the buy button beforehand, and I definitely did it on the sell button.
Hmm.
Um, so execution's a huge one for me moving forward. I need to get better with getting in early. Because if I see price action positive heading towards my level, then there's no reason I shouldn't try and get in early. Get an
Yeah.
early entry. Um, because then I can give that trade more room to breathe.
just kind of like I was talking about, not hesitating when you see the characteristics within your setup. We're not randomly entering early on just random trades. You're
Correct.
saying entering the moment you see the characteristic within your setup and getting in at that earliest possible moment as soon as you see it, no hesitation.
Yep, 100%. And that was this was a big one for my next trade too. I took BAC, Bank of America, yesterday, if I'm not mistaken. Financials had been strong this week. Uh, Very strong. The financial ETF was picking up some steam. JPM had started breaking out previous days. Bank of America was close to all-time highs. It was in the supply zone that I had marked out. It kept tapping that supply zone, but every time it dropped, it wouldn't. It would consolidate right beneath the level. Had a nice inside day. And so I put it on my watch list for that horizontal break, about 20 cents below all-time high. Um, this one was a little bit iffy for me for the same reason of that all-time high break getting faded. However, it did show strong characteristics again right at the open. Um, I got into this trade. I got into this trade early. I could have gotten in earlier, but I was happy with the initial execution of this trade. And I even got a pullback. I even got a pullback retest to the level, and I was able to hold on through it. I got an early enough entry to where that pullback didn't even put me in the red. I was still in the green on the contract, and I got an immediate push out of that all-time high, and I saw it, and I saw how strong it was, but I think that first MU one kind of got me, still feeling that little bit of market anxiety
Yeah.
that I had from the MU trade. So
Not wanting to start off on two steps back on the
cor-
beginning of the year.
correct. So I didn't give this one enough room to breathe. As soon as I saw the smallest of pullbacks on a green candle of all things, I
Hmm.
marketed out for about 31% gainer on the
Hmm.
contract. And BAC got a nice push out into all-time highs. These contracts went up to 50, 60%,
Wow.
later in the day. And I think I think it's definitely a lesson in, you know, market psychology, especially for newer traders who are very risk adverse like I am. Because I'm dealing with such a leveraged market that it's very important for me to be able to process these pullbacks constructively, and that's why I got to find and enter these setups early. And it's something I've been working on, and it's something that's worked, as of late. I just don't want these to pull back on me and go red, which is why I get a little angsty. I'm still not sizing up. I'm still going one contract deep, as per the last episode. You guys know my contract is a little bit under $1,000, so
Hmm.
I won't be sizing up till I have enough of a buffer, that I can start letting contracts go at percentages and really protecting that capital.
Hmm.
So I definitely think I could have given BAC a little bit more room. That's a huge thing, when it comes to patience, for sure.
Hmm.
Um, I think patience in the market is a huge, I mean, it's a huge skill, man. I don't know if you have anything to add for patience. There's so much to talk about when it comes to patience.
Yeah, and I think we can get into the next segment how we want to kind of structure the podcast, kind of do our lessons for the end of week review, and then we're going to just kind of pick a topic, a general topic. It may be related to our lessons for that week or that month, or just a topic in general that's on our mind. And I think that was, big for both of us. Like I said, patience with me and allowing my stops to work from entry, and not flinching myself because I think I had the same not anxiety. I'm not as, for you it's everything's moving so much faster, and for me I have, a bit of a buffer on my stops, and my time frame's a little longer. But I did have that same mentality of, hey, like I finished 2021 pretty strong, like the new year kind of gets you psyched up and excited, but we have to keep in mind the market conditions. Just because the clock turns and it's January 1 and it's a new year doesn't mean the market is going to automatically flip and the overall conditions are going to change. And so, you know, coming back to the topic of patience is paramount, like you said. Patience in the sense of being patient when you're in a trade, being patient to wait for high quality setups, being patient with the process overall in your journey and where you're at within your journey. Um, yeah, it's a great topic. We can start with letting the setups come to you. What does that mean to you, Juan? Letting the setups come to you.
It's just huge for somebody like me. Everybody thinks day trader, scalper, I can literally, take anything that's, moving, period, right? And that's not how that works. Not for me
Hmm.
specifically. Um, I think that's a big misconception when it comes to day trading. I focus on my specific setup. Those horizontal resistance break levels. It's what's worked for me, man. It's what's been paying me in the past month. I doubled my very small account in the past month. And why not just keep focusing on what works? Why try stuff that doesn't work or that I haven't tested, when I can just focus on the things that does work? Right now, we haven't been getting a lot of follow through and stuff, and that's fine. That's why I go into these trades with a scalping mentality. Um, for those 30-40% winners, like those quick winners,
Hmm.
to like kind of stack those gains. But I think it's very important to be able to sit out when the conditions are just not in your favor, and that's what letting the setups come to you for me really is. Especially as a day trader, when you got people saying, "Oh, why aren't you trading? Because you're a day trader, you can trade it." I'm like, no, I can't just trade anything because that's not how that works. For my style, for my just like the way I function as a person.
Yeah.
And I think it's important to really note that. I'd say it's good to it's one of the most important thing in the market is to have good risk management. But the next really important thing is to really get a setup down that really works for you, that fits your personality. And then you gotta let those play out. You can't force them. If you start forcing things in the market, you're gonna get taken out, like we've spoken about.
Yeah. And a lot of traders too, they force these trades on size. Even when they do identify a setup, they think they can just swing a big bat at every setup that comes along. And once you trade more, once you learn to focus on a setup or a specific strategy, then you begin to understand there's so many more variables within that you have to, tinker with and tighten up. And then you have to adjust to the market conditions as well. Using smaller position sizing when the market is bad or you're hitting a losing streak to really shorten that drawdown of how steep you're digging into that drawdown. So being patient with just the learning process, being patient with your setups and not just taking every setup that comes along. Really start studying them and learning, hey, what separates a perfect setup from a marginal setup, and then what does that performance look like? I
Yeah,
think is super, super important.
yeah, 100%. And I think you and I both picked up a lot on, patience, within the trades itself too, like within managing our own trades. Um,
Yeah.
I know we both let, our setups come in a little bit too close to break even. We're very risk adverse traders, both of us, and I know
Yes.
I know that's, ultimately what we're aiming for is, no matter what the conditions are, we're just managing risk. That is our main focus, our main goal at all times. But when you put in the hard work, right? When you put in that work to identify your process and your setup, and you go, you scan and you see these strong stocks and you see your setting up, you know, I think it's very important to have the patience when you're in it, when you work so hard to get into that trade. Um,
Yeah.
it's it's okay to take a loss, right? I mean, doing some simple math, to 2-to-1 risk to reward, or yeah, it's risk to reward. You can still make money on 50 per. If you have a 2-to-1 and you're managing appropriately, you can still make money on 50% wins.
Yeah, if when that win rate begins to dip below 50%, your winners are definitely going to have to be higher. And but like you brought up a good point. We worked so hard. We worked so hard to get to the point where we even have a setup, and we're focusing on that. And then you're scanning the market, you're doing your daily routine, and kind of making your plan for the next day, and identifying, okay, here are the stocks that I'm watching. They have my setup on them. Here are kind of the levels of where I want to execute and do business. We do all that legwork, and then we get in the trade, and sometimes that price action can just make you flinch and second guess. So it's really important to understand and focus on the price action itself and what that's doing in regards to what you should be seeing in regards to what your setup is built around. For me, breakouts, when I enter, I want to see price move very aggressively away from my entry very fast because I'm looking for those points. I'm looking for the points where price is getting very, very tight. And as soon as I see it start to move and break out from a very tight area, I can manage risk very tight around there. But, like you said, not flinching, giving it a little bit of a room to work for you, especially when you get into profit too, because you can choke the trade off super fast and it can keep running hard. And you're like, well, you look back and you go, well, why did I even move the stop up there? Why did I mark it out half of my size there? Like, maybe I could have backstopped at two, two multiples of my risk, so I'm maintaining that 2 to 1, and then or let it pull back and have a natural reaction and look for the supportive action to come in and let the price action expand back up, and move upwards, and then move your stop up. And so I think that's going to be paramount for us moving forward this year too. Is we're managing risk really well and tight, but also since we're keeping those tight stops, we're going to have to kind of give price action to maybe work a little harder for us, definitely, so we can let those winners really expand to the upside, because we can only control where we sell, and we're doing that very, very well, you and I both, with containing our losses to very, very small. But now um, I think it's going to be, when we get those big winners, we really got to have the patience and execute well on where we're adjusting our stops and adjusting them in profit, and really paying attention and focusing hard on what price action is telling us, and not looking at the P&L on the side saying, oh, I'm up a couple $100 or whatever, like let me sell that. Like, no, like, take price action and take the execution into account and try and execute in regards to what the market is telling you, and then trying to execute just as best we can
Yep,
within that.
100%. And I think that goes a lot. I think that goes also back to having a lot of patience with your process. It took me. I mean, I started trading seriously in June, and it took me like 6 months to really figure out what worked for me. And just like when you figure it out, do the back testing, put in the hard work after hours, or whatever. But you have to be able to trust and have patience with that process that you find out that fits your personality. Otherwise, you're gonna be shifting left and right, and you're gonna be either a break-even trader, or you're gonna blow up accounts because you don't have a process. So I think having patience with finding a process, and then when you find that process, having patience to test it and to know what works the best and what doesn't. I think that's very important to keep in mind as well.
Yeah, that was really well said too. I love what you said there. Don't feel this urgency. Like, the market is, when you hear people say, "Oh, have patience, have patience." Like, the market's not going anywhere. And truly, after the past year and a half of me being very active with the market, every day I'm learning, every day I'm not every day I'm trading, but every day I'm watching the market, every day I'm learning and grinding to get better. Um, it really does truly come back to focusing on your priorities and your process and doing more prep work than it is to jump in the market and just feel like you need to execute every day. Obviously, with your strategy and your time frame is going to determine that, but you also got to realize that market conditions ebb and flow. We may hit a correction period where things are very choppy and very volatile, and if your strategy is geared towards that, you're going to probably be pretty active. If we're in a trending market and things are bullish, well, the swing trading is probably going to be better for that condition. But for a condition right now, where the market is correcting and things are selling off hard, for a breakout trader like me, I have the experience and awareness enough of it. I haven't been through a full bear market cycle. I only started trading the past year and a half, seriously, full time. But I have enough awareness of how to pay attention and gain more experience, and to know, hey, I don't need to be pushing big position sizes. I don't need to be taking every range breakout. You know what I mean? Or if I do, I have enough knowledge to know that I'm not looking to hold this thing for, 4R, 5R, 10R. I'm looking to maybe get up and get my stop up to 2R, as quickly as I can, to ensure I'm maintaining my positive expectancy, maintaining that 2 to 1, because my win ratio is not even at 50%, but I still am a consistently profitable trader, because I know that underlying math. And I'm giving myself more patience with getting better, gaining more experience, and just overall, just with the process, with moving forward and getting better. Um, but yeah, Juan, I like how you really did put that, having patience with yourself, having patience with your setups, and just respecting where you're at right now in your journey. Everybody goes through the same trials and tribulations, and it's just you have to give yourself a pat on the back sometimes and say, hey, I've done a lot. And I know I'm going to make mistakes moving forward, and I'm going to need to get the experience and learn, but I'm going to be patient, and I'm going to love where I'm at right now, because I'm going to tell you, if you're in this for the money and you really don't truly love trading, uh, it's going to be very hard for you to succeed moving forward, because, we show up every day. We show up every day, and we don't trade every day, and we don't make money every day. Um, but,
Yep, and I think that's very important to keep in mind. Having, yeah, like we said, having that patience with the process, it's gonna work out in the end if you focus on that process. The profits will follow. And
yeah,
people really underestimate the power of compounding, right? When you have your process down and you really start sizing up, you're gonna start seeing, really big gains, really big winners, and people want that right now, and you can't have that right now. Like that's not how that works. You might get lucky once or twice, but you're gonna end up blowing your account up in the end if you don't have that setup, that process down.
percent.
But I think we can cut it there for this week. I think we covered a lot of ground there, a lot of things for everybody to absorb. So if you have anything, any last minute things to add there, Surreal?
No, man, I'm just happy we're doing this. It's great accountability. I'm happy with the way we're structuring these, and we'll get more, things will flow better. We'll figure out things, and the podcast will get better in a sense. And hopefully our trading does as well, and these will be beneficial to us. And if you guys enjoy them, please give us that feedback in the comments, like the videos, because we enjoy doing these, and we're mainly doing these to document our journey and to come back and kind of keep perspective on where we're at now, because we don't know everything, but we work hard every day, and we figured we might as well document it, and if that can help other people, we want to share that with others. And if other traders, want to reach out, or, if you guys have things that you think you could help us, or, we appreciate any feedback for sure. So thank you guys.
100%. We appreciate it, all the listeners, and we thank you guys for another week here.
Yeah. And I just want to say, remember, guys, manage your risks, stay focused, and be relentless. We'll see you in the next one.
See ya.